We've warned that if sales stay low, 40,000 construction jobs and 30,000 supply chain jobs could vanish. Hey, I'm Linda Ragona from the Ragona Sisters, and around here, we keep it real. Make sure to like, share, and subscribe so you don't miss what the headlines won't tell you. It's amazing that one man can affect so many people's lives, especially when he doesn't even live in this country. Yes, I'm talking about Donald Trump. Love him or hate him, this guy can rattle markets before your first coffee in the morning. What he says or posts on social media directly impacts every single Canadian. From tariffs to trade tantrums, when things go sideways between US and Canada, we feel it in our wallets, our jobs, and even our real estate market. In my last video, I called the US and Canada tariff war a bad breakup gone viral. 1 minute we're holding hands, the next Trump hates us on X, and the markets nosedive. It's like a toxic couple who break up, get back together, and then break up again, except this time the fallout affects your mortgage, your grocery bill, and your summer plans. Canada and the US aren't just neighbors, we're sisters. Our economies are so intertwined that if one sinks, the other is going to feel the pain, especially Canada being more dependent on the US for trade. We trade billions in goods. Some products cross the border 3 or 4 times before they reach their final destination. That's very intertwined. So when you hear the word tariff, it's not just political jargon. It's your paycheck, your job, your real estate equity. So when I heard Mark Carney talk about Canada's relationship with the States being over.
The relationship we had with the United States based on deepening integration of our economies and tight security and military cooperations is
over. I'm like, what the hell is he saying? I didn't understand it, but now it makes more sense. It was all political. In March, Canadians started canceling US trips in protest. At first, I thought it was clickbait, but no, people were actually pulling back, fed up with how we were being treated. And some can say, I didn't let that bother my summer plans. But hey, people have different opinions.
Neighbor, Canada has seemingly always been there for the U.S. tourism industry, but this year is different.
I was planning a trip to LA to see a friend. However, we decided to go to Mexico instead.
A new survey warns 30% of Canadians who had trips to the U.S. planned have now canceled them as tensions rise between the two countries. From the dispute over tariffs triggering boos for the American anthem, President Trump's talk of making Canada the 51st state. Canadians are vowing to make their voices heard.
It's Canada strong. We can stand up for ourselves. We've called out those comments. They're disrespectful.
The Thousand Islands area on the U.S.-Canada border already feeling the strain.
What we've noticed is a lot of our potential visitors, particularly on the Canadian side, they're quite angry. They're quite hurt by what they see as policy and rhetoric that is attacking.
Now let's talk about how Donald Trump outburst posts on social media could cost you tens of thousands of dollars on your next home. Here's how. When I see another headline saying trade talks are going sideways, I immediately think, great. There goes another quiet week in real estate. I have clients in the auto sector barely hanging on. They're scared to make any big moves. I don't blame them. They don't buy anything, they're not upgrading, they're not investing because they don't even know if they're going to have a job next quarter. Uncertainty kills momentum, and right now, uncertainty is the only thing growing really fast. Buying is placed on the back burner. So here comes the other element that could affect home prices. And no, it's not interest rates. It's these reduced immigration numbers. Now let's talk about Conference Board of Canada. Many don't know who they are, but they're one of the country's top independent economic think tanks. And they've been tracking national trends for decades. They provide data-backed insights, they shape policy and business decisions across Canada. They had some really interesting insights that could actually affect the markets. Right now, they're saying housing activity is already depressed, but we already knew that. Job fears are sidelining buyers. Many fear losing their job, like we just spoke about. In their latest outlook, they say we might see a slight rebound next year. But if immigration doesn't return to normal levels, pressure on home prices stays low. Now, some of you may be thinking the amount of immigration coming into this country in the last 2 years was explosive and imbalanced. I get that. I have the same opinion. Lower immigration cools spending, it cools rentals, it cools housing. Even BMO says if population growth stays low, we may not even need these 500,000 new homes per year. Here's a twist no one expected. Canadians could see or gain more bargaining power as tighter labor markets fuels faster wage growth. This is happening because immigration has been pulled back, and that's slowing down our labor force. Fewer workers means more competition, and that means employers might actually have to pay more. Perhaps fewer under-the-table jobs, fewer people fighting for one position. Let's break this down. Less immigration equals tighter labor, equals more power for workers, equals higher wages. Wage growth is already holding steady. StatsCan says average hourly wages rose 3.4% year over year in May. And this trend might actually keep going. Honestly, inflation is still way higher than the wage growth, so that's a whole nother video. In Q1 of 2025, employment outpaced labor force growth for the first time in 2 years. That flips the script. Unemployment sat at 7% in May. It's expected to fall to 6.2% by 2026 and 5.8% by 2027. Too many variables at play here. So this doesn't mean the housing market's going to boom, because the same immigration cuts that are boosting wages are also shrinking the pool of buyers and renters. What many didn't realize, we saw 30% annual price appreciation. That was a joke. How can that pace continue? Healthy growth is moderate, like 3 to 5% a year. And we were seeing that in some areas monthly. That is policy failure indeed. Coming up, I'll break down what this means for 2026 prices and for interest rates. But first, the conference board says housing activity could see a rebound next year, believe it or not. But how much depends on who's coming in the country, or how many are coming in the country. Add tariffs to the mix and things get messy. This is uncertainty we've been hearing about nonstop. It's that one big mess of a stew. On the ground, trade sensitivity sectors like manufacturing and transportation are under pressure. Hiring is soft. Some companies are still operating, but with reduced volume of staff. Some buyers that don't need to move, they're waiting. So what does this mean for future prices? The economy is forecasted to grow 1.5% this year, but it can contract if tariffs still are ongoing. The Bank of Canada is waiting and watching. They've held the rate at 2.75, watching inflation and trade. Inflation was 1.7% in May, believe it or not, but that's what's posted. Not enough to shift an outlook, but a rate cut could come later this year, but only if tariffs squeeze harder. Some say we might even see 2 rate drops. We'll see. Let's keep in mind, if inflation spikes again, rates stay or they may climb. It's a delicate balance. So let's zoom out for a second here. You know what's also getting squeezed? Builders. It's easy to look at cranes and assume, okay, great, construction is booming. But behind the scenes, it's a different story. Permits are down, pre-constructions are stalling, developers are pausing projects, and I'm talking about canceling big condo buildings. Because when tariffs rise, material costs and buyers hesitate. Projects sit idle. The ripple effect is huge, from trades to logistics to financing. One shaky link and the chain wobbles. There's a new bill to make building faster and easier, and it's on the table.
Was one of 10 bills that was given royal assent. Another piece of legislation looks to cut down on development charges to finally drum up new housing in Ontario. The bill was tabled by the Housing Minister, Rob Flack. We sat down for an interview on his timeline for results. What length of time are you giving yourself before you start to say, this is not working, we need to try something different?
Well, I think you're going to have to give it a year to 2 years to really see impact start. But again, we have to make sure that people can get building permits in months, not years.
Right.
And if you go to some of our competitors in the States, where they're going to be trying to attract investment from Ontario elsewhere to get those homes built, to support the workers coming there, they can get building permits in months. In most cases in this province, it takes years. We have to cut it down because time is money. So create that environment, create those conditions is what we're doing. And if at first you don't succeed, not necessarily new legislation, but we'll work with the federal government. We're going to do whatever we can to get shovels in the ground.
We've warned that if sales stay low, 40,000 construction jobs and 30,000 supply chain jobs could vanish. They're calling it a cost to build crisis. And the emotional toll, families waiting, investors stress, first-time homebuyers priced out, it's like a pressure cooker. Wages are supposedly going up, immigration's going down, tariff issues still dominating the headlines, and builders are putting everything on pause. What does this mean for your home? This isn't just a slowdown, it's a trust gap. People don't trust the timing, the policies, the outlook, and heck, some people don't trust the government. So if you're waiting for perfect, it doesn't exist. But strategy, timing, that's where things can help. Here's what you need to know. If you're a buyer, don't assume wage hikes equals price jumps. Watch immigration and interest rates. And if you're a seller, fewer buyers are moving right now. But they're watching. Price smart, present right, and know your competition. And if you're in the auto or manufacturing sector, follow the tariffs, because what Trump tweets or posts at 6 a.m. could shift your entire quarter. We're in a real transition. Wage growth sounds good, but without confidence, jobs, or population growth to support demand, it's not the full picture. This is the moment to pause, plan, and watch closely. Thanks for watching, and if you're buying or selling in the GTA, reach out. We've got your back. Stick around. Next video, we're breaking down inflation, interest rates, and how it's all colliding with housing starts. Thanks for watching, and see you in the next one.